Guys, this is S&P 500 weekly technical analysis for the week of May 5th. Now, in the history of S&P 500 in last 150 years or since 1871, this is the first time where the S&P 500 managed to survive for 4 continuous days of absolute saturation, absolute overbought conditions, because earlier it used to be only 3 days, 1, 2 and 3, and then on the third day a fall. But in maximum number of cases on the third day the S&P 500 entered into the short term bearish trend. And this is exactly the same I have mentioned in my first update to my Patreon community members, that today the S&P 500 has made history because the S&P 500 has survived for 4 continuous days at the absolute saturation levels. So last time when it was seen this kind of condition, it was in November 2021, and on the third day the S&P 500 failed, and then 6 to 7 red candles back to back. So this, the movement in the S&P 500, it will be seen as a beautiful trap. And also this was the best week for the S&P 500 that it has seen in last 20 years. Where the long-term trend is bearish. Whatever is happening or has happened, it has happened in the long-term bearish trend through the short-term bullish retrace. So just like it was there and then a bullish movement, so similarly it will be here and the bearish movement, right? This is why this unidirectional bullish movement is most likely a beautiful trap in the bullish side. So how it is going to work, the bullish trap, where the market is going to fail, okay? Once it fails, then to what levels it will be coming down, that I will discuss in detail in this S&P 500 weekly technical analysis. Now guys, let me give you a quick recap of what was anticipated to happen in the previous week and what was actually seen. And on Monday, the high was 5553 and the low was 5468. In my midday update to my Patreon community members, I mentioned that the bearish side will remain limited to 546x, whereas the bullish side will remain limited to 552x with some chances or with a probability that the 555x will be seen if the S&P 500 gains the 552x by 2:30 p.m. Eastern Time. And exactly the same was seen. So the high was 555x, low was 546x. Then came Tuesday. Tuesday the high was 5571 and Tuesday the low was 5506. And in the midday update to my Patreon community members on Tuesday, I mentioned that the high, okay, there is a moving average at 5571, okay, although the zone is in 558x, but because of the presence of the moving average, the S&P 500 might not test or hit the 558x. Rather, we can see a rejection from 5571. But the rejection will be limited to 552x at first, okay? And if the S&P 500 loses the 552x, then intraday there will be a possibility for 548x, okay? But whether 548x will be seen in the picture or not, it will be defined by 550x, because otherwise any fall will be handled by 550x. The high was 5571, low was 550x. Now on Tuesday itself, the S&P 500 hit the absolute saturation. And that is why in the same update I mentioned in the midday update, okay, a green or positive movement will trigger a widespread absolute saturation. This will then put the entire stock market in a situation wherein even before the open of the stock market tomorrow means on Wednesday, we can expect a gap down open. But then on Wednesday, we have seen a heavy gap down open. Everything was going well until the morning, okay, when the S&P 500 and the Dow Jones were trading in the open equal to high condition, okay, on Wednesday. And in this the midday update on Wednesday, I mentioned But now the SP500 has breached its or has come out of its open equal to high condition. This is why the technical obligation to the moving averages to 558x zone is now back into the picture. Okay, in the last 30 minutes, when the market was about to close, there was a sudden heavy bullish push in the market, more than 1%. Next day, we have seen a heavy gap up open. But now at this, the heavy gap up open, we knew that now there is no more bullish future, because any bullish movement will be limited to 564x. This is what? This is the zone. My calculated heavy resistance is there, and also the 61.8% Fibonacci retracement level is there. And this was my midday update on May 1st, and you can see I mentioned everything here, okay, as it is, that it has failed at the zone. Okay, it is coming down. So now on Thursday, because the market was already manipulated, market manipulators were thinking of something else, they pushed the market heavily, okay, to trap what? To trap the retail traders. So last week the movement was as expected, as anticipated. The only surprise was Friday, when the movement of the market was not expected by anyone. Okay, it was not anticipated in this manner. Okay, and it has made a history. Without manipulation, this was impossible. Impossible. So guys, if you have not yet subscribed to my YouTube channel, then please subscribe to my YouTube channel and hit the bell icon. And so far, if you have liked this video, then hit like to appreciate. And your appreciation matters a lot. Now guys, I'm going to discuss the agenda of this S&P 500 quickly. So the first point of the agenda is the S&P 500 technical analysis on the weekly chart. On the weekly chart, we know that the long-term trend is bearish. So there is a little change in the Ichimoku cloud. Okay, otherwise there is no change. It is still bearish, heavily bearish. Okay, so I will show you the weekly chart. Weekly chart means the big picture, the trend setter. Okay, we always deduce the trend through the weekly chart. Second point of the agenda is the S&P 500 technical analysis on the daily chart. Now daily chart means the short-term trend, the short-term movement. Okay, in the short term we have seen this is the bullish trend, bullish movement. So in the bearish trend, this is the short-term bullish retrace. Simple. Okay, this is how we are going to read it, right? But now absolute saturation we are anticipating. Okay, the market is now ready for back-to-back. It is going to give back-to-back fall. Okay, but not in this manner. There will be a specific pattern for that fall. Okay. Third point of the agenda is the probable movement of the SP500 from May 5th, which is Monday, through May 9th, that will be Friday. Okay, so market means how the market is going to trade, how the S&P 500, Dow Jones, Nasdaq are going to trade, okay, in the next week. So that I will discuss, or I will give you this, that the probable movement here. But guys, let me remind you that when I say the probable movement, by the time I discuss the probable movement, by that time I've already discussed the 30 to 40% of the probable movement in the first and the second point of the agenda. That is why it is highly recommended that you should watch all of these three sections in order to understand what is going to happen in the stock market in the next week and how that will happen. Now guys, I am going to discuss the first point of the agenda, and this is the weekly chart. Weekly chart means one candle represents 1 week, not 1 day or 1 hour. Now let's first discuss the candle. This candle is a good or a heavy bullish candle. Okay, as such this candle should support a gap up open on Monday, or irrespective of any open and initial or intraday bullish movement on Monday. Now, this must happen technically. Okay, but now here the absolute saturation factor will also work. This is why a gap up open may or may not happen, but an initial or intraday bullish movement will happen on Monday, even if the market, even if the S&P 500 comes into open equal to high condition. So now one more thing that you need to understand, that the S&P 500 has fulfilled its technical obligation to the moving averages, right? Now let's verify, or let's analyze the Dow Jones, the candle of the Dow Jones. This is the last weekly candle of the Dow Jones, a good bullish candle, the same thing, a gap up open, technically expected, but because of absolute saturation, no guarantee. Initial and intraday bullish movement can happen. Yes, that can happen. Okay, so that is there. but it has not fulfilled its technical obligation to all of these, the moving averages, the Dow Jones. I'm talking about the Dow Jones. Okay. So let me show you the pattern. This is the same pattern that I've shown you earlier also. But guys, before that, if you have not yet subscribed to my YouTube channel, then please subscribe to my YouTube channel and hit the bell icon. And so far, if you have liked this video, then hit like to appreciate. And your appreciation matters a lot. Now, the pattern, it is the same pattern that I've shown you earlier. If you are my if you have subscribed to my YouTube channel, or if you're my Patreon community member, the pattern is that when it was coming down, there was very heavy manipulation. Okay, this was in March 2022. Very heavy manipulation, moved up, then next week moved up. This time, by this time, the retail traders were very much convinced that it is going to move up. There will be bullish movement, no bearish movement, no fall, nothing. Okay, but what we have seen then, thereafter we have seen 1, 2, 3, 4, 5, 6, 7 bearish candles. Almost 2 months, the market was trading red, and red, only bearish. Okay, in this manner, the retail traders were trapped. Okay, then again a very heavy bullish candle. Okay, then a fall, then again bullishness. Okay, trapped, again a fall. Okay, in this manner. And if you are thinking that it happens only in the bearish trend, then no. Okay, not, because if you notice this, the S&P 500 came into the bullish trend, absolute bullish trend. Okay, here this was June 2023. Okay, then what happened? Came down. Okay, tried to move up, came down. When the retail investors were very much convinced that the market is going bearish, all of a sudden bullish movement. So see, the manipulation is an essential part of the market. Okay, there are manipulators. We all know that there are. Okay, and they have the strong connections with the people from, okay, people who have the authority. Okay, the good thing is that the manipulators manipulate the market. Okay, whenever it is needed or whenever they think that there is an opportunity. For example, it was here, they moved up. Now it is here, then they will bring it down. Manipulation happens like 2 to 4 times in a month. That's it. Okay, so that's the good thing. Okay, now let's analyze the technicals. In terms of the technicals, what we know is that S&P 500 is bearish through the moving averages and also neutral. This time it is also neutral. Okay, bearish and neutral. S&P 500 is bearish through the Bollinger Bands on the weekly chart. S&P 500 is bullish through the Ichimoku cloud on the weekly chart. S&P 500 is bearish through the MACD on the weekly chart. S&P 500 is bullish through the stochastic RSI on the weekly chart. Okay, all of this indicates that the S&P 500 is 65% to 70% bearish on the weekly chart. Now let's analyze the Dow Jones. Okay, the purpose of analyzing the Dow Jones is to confirm that whatever we are going to see here in the S&P 500 will happen. Okay, and that there will not be any surprises. In case of the Dow Jones is bearish through the moving averages on the weekly chart. Dow Jones is neutral through the Ichimoku cloud on the weekly chart. Dow Jones is bearish through the Bollinger Bands on the weekly chart. Dow Jones is bearish through the MACD on the weekly chart. MACD is the moving average convergence divergence. Okay, Dow Jones is bullish through the stochastic RSI on the weekly chart. All of this indicates that the Dow Jones is 80% bearish on the weekly chart. This means that the market is bearish. Okay, this is why I always analyze the Dow Jones, because S&P 500 and Nasdaq are the tech indices. Okay, so they are easy to manipulate. Now, when I say this, that the Dow Jones is so heavy, okay, and that 80% bearishness is there, 70% is in the S&P 500. But when we are going to see the fall, when practically we are going to see the fall, okay, when will come the confirmation that the S&P 500 is going to fall or the entire stock market is going to fall? Okay, so there is a simple logic. Whenever there comes a closing below the Ichimoku cloud, what? A closing below the Ichimoku cloud. Okay, Dow Jones is expected to give up 15%. S&P 500 is expected to give up 20%. Okay. Now, this is very simple logic. However, even before it gives a closing below this, the Ichimoku cloud, there are very strong zones. There are two very strong zones. Okay, once the S&P 500 loses the first zone, it will be quite clear. Now the market is ready for the S&P 500 is ready for 20% fall. Once it loses the second zone, it will be 100% clear. It is going to fall. It is going to come down. Okay, and then either in the same week or in the next week, it can give a closing below the Ichimoku cloud. So if you're my Patreon community member, then I will tell you whenever this happens. Okay, so you need not to wait for a closing below the Ichimoku cloud, because to my Patreon community members, okay, I tell them every day what is happening. So I give them the pre-market analysis. So this pre-market analysis is given 1 or 2 hours before the open of the stock market. Then comes the midday update. Midday update is given after 3 hours. Then comes the final update. Final update is given 1 or 2 hours before the closing of the stock market. In this manner, my Patreon community members are very well aware of everything, the movement that is happening every hour, each hour. Okay, every minute or so it is happening. My Patreon community members are very well aware of that. And guys, it is not just about these daily precise updates that I give to my Patreon community members every day from Monday through Friday. But I also give the stock market opportunities, minimum 5 to 10 every week in the premium stocks, in the top 30 or 40 companies of the US stock market. And that's not all, because I also give this the mid-week update. Mid-week update is basically a video technical analysis, similar to the weekly technical analysis. But here in the mid-week update, okay, I tell the numbers, the zones, and the precise movement that in this the mid-week update. This mid-week update is given every Wednesday or Thursday to my Patreon community members. So guys, whenever you want to join my Patreon community, in order to get all of these, okay, the daily precise updates, stock market opportunities, the midweek update, then I have given the link in the description of the video and also in the comment section. And guys, when you follow that link, then you will see that this is my Patreon page, this is my Patreon profile. And when you scroll down, then you will see that there are these three levels: level 1, level 2, and level 3. Now, these two levels, level 1 and level 2, are same. The only difference is the geographical location. Okay, otherwise everything is same. So when you participate in either in level 1 or level 2, then you will be getting all midweek update videos. Okay, every Wednesday or Thursday. Then daily precise SP500 analysis, updates, movement, momentum, levels, zones, everything every day. Then the stock market opportunities, minimum 5 to 10 every week. Now this level 3 is a very special level. Okay, because whatever you are going to get here, by default you will get the same here. Okay, midweek update videos, daily precise analysis, movement, and the stock market opportunities. Other than that, there will be one Zoom meeting, okay, of 2 to 3 hours. And in this Zoom meeting, this will be one-on-one Zoom meeting. It will be just me and you in this meeting. Okay, I will teach you the entry and exit secrets, how to maximize your profits and how to minimize your losses. Okay, I will tell you one premium hack. Okay, this hack works almost 100% of the times with almost 100% accuracy. This is a hidden and a premium hack that you might not have seen or heard of. Then comes the one trading or options strategy. Okay, so I will tell you one strategy that works almost 100% of the times with almost 100% accuracy. Okay, then the modified technical indicators, then the options premium calculator. See, more than 97-98% of the traders, they do not know how to calculate the premium value of any option and they are trading blindly. Okay, and most of them are trading in the 0 DTE. Okay, so this is the primary cause for the losses. So I will give you this. So I will tell you how to use the options premium calculator. So in this manner, this the level 3 is very special. Okay, and you are going to get much more than what you can anticipate. And guys, if you notice, many people have joined my Patreon community for last many days, weeks, months, years, and they are getting these daily precise updates of the S&P 500, Dow Jones, and in a manner to the entire stock market every day from Monday through Friday. Pre-market analysis, pre-market update, midday update, final update, okay, comment post to ask the questions. So guys, whenever you want to join my Patreon community, I have given the link in the description of the video and also in the comment section. You can follow that link and you can join my Patreon community, and you are welcome. Now guys, I am going to discuss the second point of the agenda of this S&P 500 technical analysis, and this is the daily chart. Okay, daily chart means one candle represents one day, not 1 week or 1 hour. One candle means one day. Okay, now let's first analyze the candle. It's a good candle, good or a heavy bullish candle. Technically, this candle indicates an initial or intraday bullish movement on Monday, right? This is the technical definition of the candle. But okay, there are these 4 days of absolute saturation, and on Friday it has made history. Okay, that is why there may come this the open equal to high condition. What is this, the open equal to high condition? Open equal to high condition means that there will be an open, maybe a gap up, maybe a gap down. There will be the open. Immediately after open, it will come down. Okay, and the open price will be the high of the day. That's it. Okay, that condition. So now that after this kind of heavy manipulation for these 4 days, okay, especially for this, not for 3 days. It started from Wednesday, Thursday, and Friday. Okay, and the best movement seen in last 20 years in S&P 500, even when the economy is going through this the crisis and everything is bad. Anyways, so now we are anticipating profit booking on Monday. Now, profit booking, okay, I will discuss the profit booking later. But first, let me complete the candle part. Candle, okay, this is what we know. Now, the candle of the Dow Jones, okay. If you notice, the Dow Jones was in open equal to low condition, indicating very heavy bullishness, and also gained, okay, then more than 1%, okay. And 3 days of absolute saturation. 3 days in S&P 500, it is 4 days. It is also indicating the same, an initial or intraday bullish movement on Monday. That's it. Okay. But the saturation, absolute saturation is there. Okay. And there may come open equal to high condition. Okay. Irrespective of any open on Monday. So profit booking. So there is a, okay, let me tell you that how the profit booking happens. But guys, before that, if you have not yet subscribed to my YouTube channel, then please subscribe to my YouTube channel and hit the bell icon. And so far, if you have liked this video, then hit like to appreciate, and your appreciation matters a lot. Now, generally profit booking, okay, it happens in the following manners. Generally, okay, most commonly you will see these two, okay, these two types of the profit booking. Number one, there will be a gap up open. After the gap up open, the market will try to move up, will indicate, okay, this upward movement after open will indicate or will trigger, okay, this the fear. So this fear will be among the retail traders, okay, that they will think that now market is going bullish, okay, and they might miss the train. So they will then start buying. So in this manner, after a gap up open, it will try to move up, okay. Then then within the first hour, okay, market will start to show some weakness, okay, weakness in a manner that it will then come down, okay, will try to hold around the open price, okay, and then finally or slowly it will start to come down, and there will be an intraday staircase pattern will be seen, right? So this is what we see when the profit booking happens. The second condition that is seen, okay, is the open equal to high condition, and it is generally seen in a gap down condition. Okay, so open equal to high means that there was a gap down. Immediately after open, it came down. So something similar to what we have seen here. There was a gap down. Okay, so gap down was predicted. We knew that gap down will happen on this day. Okay, anyways, so a gap down and then it came down. Okay, or like this, gap down and then fall. Means it will not give any chance to the retail traders to exit. And the third, okay, there's a third scenario is the same open equal to high condition is there. Okay, but it happens in the gap up. There will be a gap up open. Okay, so gap up open, and then immediately after open it will come down. Means there will be a gap up open, not gap down, gap up. But immediately after open it will come down. Then it will give some good fall intraday. Okay, so these are the three conditions wherein we see the profit book. Technically, if you notice change in the moving averages, S&P 500 is now bullish through the moving averages on the daily chart. S&P 500 is bullish through the Bollinger Bands on the weekly chart. Sorry, on the daily chart. S&P 500 is bearish through the Ichimoku cloud on the daily chart. S&P 500 is bullish through the MACD on the daily chart. S&P 500 is bullish through the stochastic RSI on the daily chart, and all of the technical indicators are either oversaturated, absolute saturated, oversaturated, or in overbought conditions. So, considering all of the technical indicators, okay, the S&P 500 is 75% bullish on the daily chart. 75% bullish. Last week it was neutral, 50-50. Now it is 75% bullish. However, on the weekly chart, what we have seen, 70% bearish, not bullish, bearish. So the long-term trend is bearish, short-term is bullish. Okay, this short-term bullish trend is happening in the long-term bearish trend. Okay, what? Give you an opportunity to go bearish at these lower highs. Just like it was coming down, formed a lower high, fall, lower high, fall, fall, lower high, fall. Okay, so in this manner, now let's analyze the Dow Jones in order to confirm that whatever is happening or whatever we are seeing, okay, is truly or will truly happen. Dow Jones is neutral through the moving averages. Dow Jones is bearish through the Ichimoku cloud. Dow Jones is bullish through the Bollinger Bands, and Dow Jones is bullish through the MACD. Dow Jones is bullish through the stochastic RSI. All other technical indicators are heavily saturated, heavily overbought. Dow Jones in this manner is 65%, you can say, bullish, 60% bullish or 65% bullish on the daily chart. Okay, now there is one this very interesting thing. It is 65% bullish on the daily chart, but is 80% bearish on the weekly chart. Okay, so Dow Jones is more bearish as compared to the S&P 500. Now, one very important thing. S&P 500 has given a confirmed crossover in the moving averages on the daily chart. Fine, no problem. Dow Jones, the moving averages are still trading bearish. This means that if there comes a heavy fall on Monday, then this expected bullish crossover will not happen. Rather, it will form a bearish slip. What bearish slip? What does that mean? This means that for the entire week, if all goes well, for the entire week, for all of the 5 days. That is why when we use the technical indicator, that immediately, okay, we will come to know that this fall is now going to be limited. There will be a reversal. This reversal or this bullish retrace will be limited, and then there will be a fall. Okay, so through the technical indicators, through the technicals, through some mathematical calculation, okay, we can actually calculate the emotions and these things. Okay, and guys, there is one more thing. Let me tell you that this is my S&P 500 knowledge transfer program. Okay, through this program, I teach the technicals, the technical movement, the patterns. Okay, how to predict the trap. Okay, the manipulation, the movement, how to analyze each and everything. Means, in short, whatever I know, whatever I have learned in last many years, okay, whatever I know, I am going to teach, okay, that to you, right, through this program, through these levels or so. Okay, so I will cover in this program, I will cover the basics, the advanced, okay, all of the technical indicators, okay, the modified values and how they work and how to analyze these technical indicators. Okay, then the trading and how to use these trading strategies, okay, in a very different manner. Okay, then how to get the information. Stock market is all about the information. Then the options, everything about the option trading strategies, option premium calculator, okay, and then the calculated support and resistance levels, okay. So these support and resistance levels I have calculated myself, so I will share this with you, okay. Then the limits, okay, how to predict the limit, that okay, it will move to this zone or this level and then it will fall. For example, in the recent times, okay, recently I have predicted that 614x will be the all-time high of the S&P 500, and I predicted it 4 or 5 months before it was seen, okay, in October 2024, and this was seen in February, okay, and then it came down, okay. So how to predict this, then how to deduce a trend, that whether it's a bullish trend or a bearish trend, and how to get the confirmation of the same, each and everything. And then these the hacks, okay, the intraday hacks, the short term hacks, the long term hacks, okay. So through these the hacks you can predict the movement, immediate movement, whether there will be a rise, whether there will be a fall, okay, each and everything. This hacks works with almost 100% accuracy and almost 100% of the times. And then this is my email address. These are the very simple terms and conditions. These are the snapshots of the meetings. So guys, whenever you want to participate in this program, in the S&P 500 knowledge transfer program, so you can simply send me an email, okay. I have given the link to this spreadsheet in the description of the video and also in the comment section. However, guys, if you are only looking for the hacks or for the short-term solution, see, the S&P 500 knowledge transfer is the long-term solution. Okay, it will remain with you. Okay, it will be there with you lifelong, and you will become self-reliant. Okay, because then you will know everything. However, if you are looking for the short-term solution, then you can learn the hacks. Okay, or the options. So I mentioned these the products here. Okay, on my Patreon page. Okay, so when you visit my Patreon page, then go to the shop section, and in the shop section you will find these the products. So guys, I have given the link to my Patreon page, my Patreon profile, in the description of the video and also in the comment section. Now guys, I'm going to discuss the third and the last point of the agenda, okay, of this S&P 500 weekly technical analysis. And here I will give you the probable movement of the S&P 500, Dow Jones, and in a manner to the entire market. Means what is going to happen in this the stock market, okay, in the next week, in the week of May 5th. Okay. Now you need to understand Wednesday, 5th of May, sorry, 7th of May. Okay. Uh, 2 p.m. Eastern time, the FOMC decision will be released, will be known. Okay. Now there are 99.9% chances that there will be no rate cut, there will be another pause. Okay. And this is not something I've made up a story. You can visit the Fed interest rate watch tool. Okay, you can Google, okay, and then you will visit this website and you will see, okay, that they are anticipating, means the Wall Street is anticipating 99.9% that there will be no rate cut in this the meeting. Okay, so 2 p.m. fine. Market is now preparing or has prepared for that call. Okay, then at 2:30 p.m. Eastern time, okay, on Wednesday, there will be the press conference of the Fed chairman. This press conference of the Fed chairman can bring down the market heavily. If the Fed chairman expresses his concern, just like he has expressed here, and here, okay, regarding the uncertainty, then tariffs, then the recession. Recession is already there. Okay, so just the official announcement is pending. Okay. So, these things, then this press conference will bring down the market. Market will come down heavily. And this, the FOMC, is the only event for the next week. Okay, this means that market has Monday and Tuesday, but still, because 4 days, okay, it has created a history, okay, in 150 years of S&P 500, 4 days on absolute saturation. Exactly what I've shared in the first update to my Patreon community members on Friday. Because last time when it was seen, it was in November 2021, but that time there were only 3 days, but now there are 4 days. That is why it is a history. This means that irrespective of anything, okay, market is now so heavy that technically it was supposed to come down on Thursday itself, but it sustained. Then it sustained on Friday also. So now market means the S&P 500 and the Dow Jones and the Nasdaq and the entire US stock market is now susceptible for a heavy fall. Sorry, not a heavy fall, a very heavy fall. Okay, a fall in a manner that back to back, okay, there will be red candles, that kind of fall. And if the entire week, if in the entire week, if the S&P 500 loses like 10%, then also that is not going to saturate anything. That will be absolutely normal. Okay. So from this, the recent closing, if I calculate, so 10% will be back in 5,100. Okay. But before that, there are these two strong zones. Then these strong zones will define, okay, whether there will be 10% fall or if it will be limited to 6% or so. Okay. So historically, we have seen that whenever such a scenario, such a condition, okay, absolute saturation was seen, then for 6 to 7 back to back, we have seen red candle. Okay, this means that there is very high, very heavy probability that on Monday the profit booking will happen. Okay, and the cases of profit booking I've already shared. Okay, this will happen. Okay, because the chances of surviving or chances of giving another green candle, okay, are absolute low. Okay, only and only a very heavy manipulation can help the market. Now when I say the very heavy manipulation, what does that mean? This means that someone comment on something, okay, there may come a news, or there may, or some news channel, or for example, okay, recently Wall Street Journal has posted this the news. Okay, that news gave this the heavy push to the market 2 or 3 times in the Wall Street Journal, but that news was not confirmed. So on that, the unconfirmed news, the market moved up heavily. Then the president announced 90-day pause. Then that push, that helped the market manipulators to move, okay, to push the market heavily. Okay, all of a sudden the picture was changed. In this manner, something very, very unusual. Okay, but now what we know is that any green candle, any green movement, okay, will be the fifth day of absolute saturation. Okay, and in this condition, the S&P 500, okay, as per the calculation, around 9.5%, it must give up 9.5%, lose 9.5% heavily. Okay, then only this heavy saturation will be compensated. It will then come up, okay, absolutely normal. Anyways, now, so I've discussed this, the saturation and the manipulator scenarios. Now, in terms of the numbers, what we know is that S&P 500 has now moved to these the levels. Okay, and yesterday on Friday, it has hit the 5,700 psychological mark. Although it closed below 5,700 at 5686. Okay, it also closed below my calculated resistance level. Okay, now the open will define whether, now the open on Monday will define what is going to happen next immediately. Okay. Now, other than that, now there comes a very heavy resistance in the 571x. This is the zone, very heavy resistance zone. Okay, 571x. So as of now, I can simply mention the 571x, and after that, it will be 573x, 573x. Okay. So bullish movement, there is no more room left in the bullish movement. Okay, even if it try to move up, it will be able to move up because of manipulation, not because of retail traders. No, only because of manipulation, otherwise not. So that is why, okay, 571x, 573x is then it is there. Okay, now comes the bearish movement. There is a condition for the bullish movement. Okay, uh, this is what we know is that it was heavily pushed, manipulated, but this manipulated movement can turn into a normal and technical bullish movement. There are chances. Okay, so how this can be achieved, how to convert this heavily manipulated movement into a normal and technical bullish movement? Okay, for that to happen, first it will have to come down. It will have to come down to in the 5,4xx range, or it should remain below 5,500, or means 555x. It should remain below 555x. Okay, but movement in 5,4 XX range. Okay, so this will suffice, this will fulfill that condition. So what should happen is that the S&P 500 should lose from here, should enter into 54XX. This means around 3.5% or 4% fall, 4% fall, okay, or 3.5% fall. When this much fall happens, okay, it comes down, not okay, and also this fall must happen in 1 to 2 days. Sorry, not 1 to 2 days. Sorry. It must happen in 2 to 3 days. It must not happen in one day. It must take 2 to 3 days. Okay, one candle, then second candle, or maybe third candle. But all of these candles must be red candles back to back. Now comes the red candles. Okay, fall to 54XX range, right? Now, and what will happen? In this manner, the technicals, so S&P 500 will come out of the saturation. All of the technicals will cool down. Okay, not to the levels when we can say okay that now it can move up heavily again and again. Now it will, so the technicals will cool down in a manner that after sustaining at this heavy support level or heavy support zone in the 546, sorry, 546x, yes, 546x, around 546x, okay, then the S&P 500 will come into a condition to move up, to go bullish. Now when I say this is the bullish movement, bullishness, then that bullishness or the bullish movement will be the technical bullish movement. That will not be the manipulated, that will be the technical bullish movement. And if that happens, if this kind of technical movement is seen, in that case this technical movement will be allowed. Okay, and then the S&P 500 can enter into 57XX, can even trade and sustain in the 57XX, and then will fall from 57XX. So this means that even if we convert the manipulated movement into the technical movement, then also it is allowed to move to 57XX, or let me give you a better idea. This is the high, from this was the lower high. Okay, it can move up to this, the lower high that was seen on 25th of March, to this, the lower high. That's it. Okay, and then a good fall, just like what we have seen here. Okay, around 13-14% fall, 15% fall was there. Okay, in this manner, okay, this fall will be allowed. Now, sorry, not a fall will be allowed, but this the bullish movement will be allowed. Okay, in this manner. I hope this is clear. And then again, this is the fall. The fall will happen. Okay, because the long-term trend is bearish. Fall will happen. Now, so this will be just one condition or the only condition for the bullish movement. Okay. Now, because we are anticipating bearish movement, the continuation of the bearish movement. Okay. This means that even if the manipulators do not leave the market on Monday also, okay, now absolute, because it is absolutely manipulated, then what will happen? Even in that case, S&P 500 will come down to test these moving averages around 5,500. Okay, so that same technical obligation which is applicable on the weekly chart, the same technical obligation is applicable on the daily chart. It will have to come down to these, the moving averages on the daily chart. Okay, that is the technical obligation, right? This means that sooner or later, okay, when I say sooner or later, I mean in the next week, S&P 500 will be coming down to test the moving averages. What happens at the moving averages, it's a different story. Okay, and if you are my Patreon community member, okay, then when it hits, when it tests the moving averages, then I will tell you what is happening. However, if on Monday itself there comes a heavy fall, then the expected bullish crossover in the moving averages of the Dow Jones will not happen. Rather, there will be a slip. When there comes a slip, when a slip is seen in the Dow Jones, then no matter what is happening in the S&P 500, then forget about the S&P 500 or the technicals of the S&P 500. The technicals of the Dow Jones will supersede the technicals of the S&P 500. Means a fall will be inevitable. It will happen. Okay. Now, question is that what levels it should come down. Okay, what we know is that as of now, moving averages 5,000, around 5,500 psychological mark. Okay, otherwise 546x is the level. It should come down to 546x technical level. However, in order to fulfill all of the conditions, okay, you need to understand that on 22nd of April, okay, then on 23rd of April, okay, so there is a gap. This is the gap, okay. Now the high of this candle was 5309.61, means 5310, okay. So 5310 is the target, okay. It will hit 5310, it will breach, it will come down, okay, it will trade in 52xx, 51xx, but 5310 is the target in the bearish side. And if you're thinking that it will take a lot of time to cover the 5310, then no. Within a week, I think, how much is that, the 5310? It is only 7%. Yes, perfectly fine. 7% is perfectly fine. If the S&P 500 can move up by 11% or 10% within one day, then it can give up 7%, okay, within 1 week. Okay. Now the S&P 500 needs just a little, just a very little support from the Fed chairman. That's it. That's it. Okay. Once the Fed chairman goes hawkish, market will come down 5.3, 5.2, 5.4. All of these will be fulfilled. Okay. The technically, okay, a bearish lift will confirm that we might not need to wait for the Fed chairman. Okay. Because eventually the market will come down. Market has to come down. Okay. For the bullish movement to happen, okay, first it will have to come down, settle around this the level, the moving averages, okay, and then after the technicals have cooled down, then it should continue its journey to 5700 range. Okay, maximum is allowed up to this the high, okay, that was seen on 25th of March, that was in the 5770 something. Okay, that is the maximum S&P 500 as of now can achieve. Yes, there is one more thing. This the high was 5787. The high was 5787. If there comes two consecutive closings above 5787, okay, above this 5787, okay, and then just after that there is one my calculated resistance, this 5787 and 9x. Okay, so 5787, okay, slash 9x, 579x. This is the zone. If there comes two consecutive closings above the zone, in that case, yes, that will be the first very heavy indication that for now the market has completed this the short-term bearish cycle. It is now expected to re-enter into its the bullish cycle. Okay, and the trend which is the in the long-term bearish trend, this long-term bearish trend can change to the bullish trend. Okay, before bullish it will first change to neutral, okay, in 2 to 3 weeks, because it is a long-term trend, so it takes time. Okay, time is 1 month, 2 months, 3 months, so that this the bearish long-term trend can change to neutral, and then after coming into the neutral within 1 to 2 weeks, okay, it will change to bullish. Means it will take, this transition will take 1 to 2 months, okay, from bearish to bullish. Okay, then that will be the time when I will say, okay, now, okay, this the condition has changed, okay, and it is going to move up. But for that to happen, what I suggest or what I recommend is that, technically the market first should come down, hold, convert the manipulated movement into the technical bullish movement, move up, sustain, struggle, struggle, come down, okay, sustain, struggle, move up, and then finally comes to consecutive closings. This process will take around 2 weeks. Okay, so now everything will be very much clear by this yes, on Monday itself. Okay, it will be very much clear, not through the S&P 500 but through the Dow Jones, very much clear. Okay, what is going to happen immediately, and then on Wednesday, whatever the doubt will be there, the doubt will be very much clear on Wednesday. After Wednesday, whatever will be the direction of the market, that direction will be followed for next around 1 month or so. Okay, if there is manipulation, so this manipulation cannot continue. Okay, market must come out of the manipulation. This is, but guys, whatever is going to happen, I will keep you posted through these daily precise updates of the S&P 500, which I give to my Patreon community members every day. So if you have not yet joined my Patreon community, then I've given the link in the description of the video. and also in the comment section. And guys, if you are looking for the long-term solution, okay, long-term means if you want to become self-reliant, then you can participate in my S&P 500 knowledge transfer program. Okay, and you will get much more what you can expect. And if you are looking specifically for the hacks, then you can visit my Patreon profile, and under the shop section, you will find all of these the hacks. And guys, if you have liked this video, then hit like to appreciate, and your appreciation matters a lot. And if you have any questions that you want to ask, then please feel free to ask your question through the comment section. And guys, if you have not yet subscribed to my YouTube channel, then please subscribe to my YouTube channel and hit the bell icon.